Welcome back, guys, to another episode of Decentralized Chain. It's me, Feroz, bringing you the latest news, reviews, and blockchain tech. So today we are going to be looking at Block Collider. Now, Block Collider is a very interesting project. They're proposing to create ultimately what is a cross-blockchain service for $7 million hard cap. Now that is almost a third of what is pretty much being asked for in terms of blockchain service ICOs. So let's try and understand a little bit more about what it is they're actually looking to do and what it is that we're going to get at the end of it. So ultimately, Block Collider is a minable multi-chain protocol for stablecoins, decentralized exchanges, and meta contracts. Now what that means in real terms is basically cryptocurrencies today are what is deemed as being walled gardens. So what that means is that you can't reuse a trigger or execute a contract or transaction with another blockchain. It has to happen on that founding blockchain. There's no interoperability between, say, Ethereum and Neo, okay? And the other element behind this is that all of the transactions that are verified are done by what they call validators, okay? So ultimately, if you have enough computational power or resource cheaply, you could end up moving away from having a decentralized network to having a centralized network, because all the validators are predominantly in one specific region or locale where computational or hash power is cheap. So you're kind of moving away from the decentralized element overall. Now, what Block Collider are proposing here is that when they launch their mainnet, they will be providing cross-blockchain services for BTC, Ethereum, Lisk, Neo, and Waves. So they've gone with 5 of the most popular blockchains, successful blockchains that are currently out there today. Now that is pretty impressive. And on top of that, they're looking to do all of that for 7 million. Now, on top of that, if that wasn't enough, when they launch their ICO, it's going to be exactly at the same time that they're launching their mainnet. So you're going to be getting ultimately a mainnet that's already ready to go, working, and you've got the proof there and then as to whether you want to invest in the ICO or not. Now that is really impressive overall. And the fact that it's $7 million hard cap and the coins are significantly less, there is a potential here for the multipliers to be significantly higher as well. I mean, significantly higher. Now let's digest this project a bit more and really understand what's under the hood overall. So as we scroll down, let's start the scene. So we've got 3 blockchain services and there's a wall between all of them. So the idea here is, you know, the problem is walled gardens. These blockchains can't talk to each other. There's no interoperability between those. So you can't easily trade between those. So the solution they've got here is a multi-chain technology. And so the way that looks like is that they call upon validators. So existing blockchains today, they have validators, I've mentioned before, which ultimately guarantee the state of that blockchain at a given moment when it validates a transaction. So validators, you may also can be referred to as masternodes, witnesses, okay, some of the common terms that we've seen. Now the issue here with validators is that if you have a centralized set of validators, okay, and I'm not saying they all want to do that, but you know, if you do have a number of validators in a central location, there is a potential for validators to become corrupted. And by corrupted, what I mean is that they send through bad transactions, okay, and if a number of them are sending through bad transactions, then ultimately when it starts syncing up with the rest of the validators on a network, it can cause significant amount of congestion, network lock, freezing, until the validations have been validated by good validators on the network overall. So, you know, that leads to a level of distrust amongst validators overall. So one of the key areas here is that they want to do away with the validators and move to a truly decentralized blockchain service rather than a centralized one that's region locked, purely based on economy and cost of power. That's what it tends to be. Most of the validators, you know, today are in China because it's much lower cost in terms of running the mining hardware that's needed in order to validate overall. So if we move further down in terms of how this blockchain works, in the visual behind me, what you'll see is various streams of blockchains: Neo, Ethereum, Lisk, Waves. So you've got 4 over here that are coming into a single funnel. And so the way Block Collider is different is that it builds a new blockchain with a mining algorithm that actually consumes the blocks from other parts of the blockchain that have already been mined. Okay, so it kind of combines that into its overall computational challenge. It's relying on what's already been done within the Bitcoin blockchain, within the Ethereum, within the Lisk, within the Neo blockchain. So it's already using their proof of work and it's bringing that into their own computational challenge overall. And then what you can see here is a single blockchain coming out on the other end, which is your Block Collider blockchain, and is using those elements in order to provide the validation, cross-chain validation, and produce a single blockchain that will then allow cross-chain interoperability overall. So then if we kind of scroll a bit further down, what that means is, you know, those blockchains are the 5 that they're looking to launch with, as I mentioned before: Waves, Lisk, Bitcoin, Neo, Ethereum overall. And what that really means is actually a number of things. Okay, they've got lower fees, because if you think about it, this ultimately is acting like a load balancer. It's distributing the value between the blockchains. If one blockchain is significantly congested, then we all know that the transaction fees become higher. So ultimately, if you're able to operate between multiple blockchains, then you can take the value of store from somewhere else where it's not as congested and use that as a transfer of value overall. So you've got lower fees from that perspective. You've also got, on the same token, mind the pun, that you're able to reach out to ICOs or run ICOs more easily by getting reach to further users, because here you can easily enable the acceptance of Ethereum, Neo, or Waves smart contract or service and use that as an exchange for Waves or Lisk, for example. So you can use other transactions from other chains. So there you got the interoperability as well. So you're not reliant when you run an ICO on one particular blockchain. You can take the value store from others in order to do that. And then as you sort of go further down, we've got the recycling of hash power. Because it's relying on the proof of work from the previous blockchains before it gets to Block Collider and applies its own algorithm on top, you're also being able to kind of go past the hashing power that's needed as well to a certain extent, because it's already being done for you before it gets to Block Collider. And then you've also got security built in. So this is more around privacy. The idea being that once the cross-chain transactions, they're all encrypted. So when they actually go through the network, no one's going to be able to snoop or see or do any front running to see what's actually coming out the other end, because you've got the meta contract in between the middle that's ultimately taking the exchange from the smart contracts across the various blockchains as well. So you kind of got that privacy element built in, which is handy as well for transfer of value and funds. And then lastly, you've got backwards compatibility. The idea being that because obviously we're working across multiple blockchains, you don't necessarily need to then go ahead and learn how Block Collider contracts are created. You can still continue to create the contracts using your native blockchain overall and the framework from Block Collider in order to make sure that the meta contract works from point A through to B, and using Block Collider as your medium to make that transfer happen overall. Now, in terms of the actual mining side, as I touched on before, common mining at the moment is proof of work. That's the common consensus that's used within Bitcoin, within Ethereum. It's a tested method. It's quite a computational and resource hungry method as well at the same time. So as I said before, that kind of moves down to centralization of those types of mining hardware. Idea being that where electricity is cheap, you will tend to get most of that type of mining happening in that space. So you've got a centralization of that element there. Now, Block Collider basically builds on that because it's obviously taking in the proof of work consensus, but then it's adding in its own algorithm on top when it creates the actual Block Collider blockchain as an aggregate from the previous blockchains that have fed into it overall. So in terms of that element, what that means is overall that the blockchain is stronger, because if miners were to try and use bad blocks overall, first of all, they're going to have to unravel the Block Collider blockchain, but on top of that, they're going to have to unravel all the previous blockchains that have fed into Block Collider in order to create that transaction in the first place. Now, talking about the algorithm, specifically Block Collider is using what they call proof of distance. When we're talking about mining, actually the mining is slightly different here, because they've actually split out the block mining and the transaction mining in order to create a much more fairer system. Whereas previously it's all done by those who have the most power, the most computational resource. But here they're actually pulling the two apart and having them work independently in order to make a much more fairer system, but also to make a more decentralized system as well. So then as we move further down, we've got emblems. So emblems is the token. Okay, that is what is going to be sold during the ICO. And it has pretty much a very critical role within the overall Block Collider's operation. It serves two roles. Firstly, the emblems are sold in the ICO. Okay, so each contains basically a basket of cryptocurrencies off the 5 blockchains. Okay, so this means that for every emblem that you have, you'll receive an airdrop with a fixed amount of marked tokens, which will be from Lisk, Ethereum, Waves, Neo, and BTC. So as you can already see, this ICO, when they launch, the mainnet is going to be launching at the same time. They're not going to be looking to get funding and then deliver a mainnet afterwards. They're going to be this is all built in to the token itself, so they have to have a mainnet ready for launch at the same time. So that's the first critical component. The second one, as we move down, is after the ICO, the miner's emblems balance increases the amount of transactions the miner can add to a block. So the more emblems they have, the more transactions they can add onto a block, therefore being able to command more fees overall. So it basically dynamically adjusts as well. So that's kind of the value behind having emblems as a whole. Now, the actual token mechanics here are in two forms. You've got emblem, which is ultimately what you and I will be buying in the crowd sale if we participate. And then you've got NRG. So that's the primary currency for the Block Collider ecosystem overall. So that is what's basically awarded to the miners when they win a block. Okay, and it's how the fees are required in order to execute transactions, and that's how they're paid as well. So if you want to kind of liken it to anything, you can say it's very similar to the way Ethereum has gas in order to power the transactions. However, gas is ultimately derived from Ethereum automatically, whereas here you have to mine the NRG in order to get that out overall. So it's not automatically generated. Lots of detail in the white paper. Now, as we then move further down, what we have is they've got the app lab. Now, this is pretty impressive. So the idea here is actually they've got the Collider wallet for Amazon Alexa. And here you will be able to ultimately do a number of things. Send funds to whoever. You can add contacts and manage your wallet from Alexa. You can import and execute smart contracts from Alexa, as well as run multiple blockchains. The idea being, because it's cross-blockchain and you've got the interoperability, you can do that across all the blockchains overall. So their main goal here is really to have Collider on everything. It's kind of a ledger of things, so to speak. You've got IoT, so this here is the ledger of things, being able to connect everything together. So they have Alexa and Telegram prototypes ready, okay, and they're going to be moving up with Slack, Facebook Messenger, WhatsApp, and Kik. So they're going after quite a few of the popular applications that are already used today in market and embedding that product, that blockchain service within that as well. So ultimately increasing usage and adoption. So their strategy is quite on point in terms of where they're going with that. You also have the wallet being a chatbot. So the idea here is that you can send different cryptocurrencies, transferring the emblems, because as we said before, the emblems ultimately have a package of each of those blockchain tokens within there. So joining ICOs should hopefully be something very simple and straightforward in the future with a voice command over Alexa. You've also got enterprise grade security, two-factor authentication, semi-lock technology built into that as well. So it's well protected, hacking, etc. And then as we then move down, it's an ever evolving personal blockchain trader. So what they've got here is they're looking to actually bring in a trading functionality as well going forward long term, well into the future should I say, is that the idea here is that the wallet will continually increase in terms of functionality. Initially it will just start off with the ability to execute trades on your behalf using tested trading strategies. So you know they're going quite big in terms of what they want to be able to do with that all-in-one encompassing wallet, because ultimately if it is a blockchain which is interoperable between many blockchains, then you don't need to necessarily have all the other blockchains running concurrently or having wallets for each of those at the same time. You actually just have the Block Collider wallet, which then manages all that for you and manages the trades for you as well, cross-chain. And then, which, you know, quite impressive here, once they get to it, is join ICOs with a single voice command. So the idea here being is that, you know, the idea is you literally just go tell Alexa about the ICO that you want to join, and the rest of it will just happen. You'll have the smart contract, assuming that those ICOs then enable smart contracts using the Block Collider framework to create ultimately interoperable blockchain transactions. One thing I do like actually is that I was able to get hold of the prototype for the proof of distance algorithm that they're using in order to be able to create the next transaction overall. And so here's a really good example. They say that they can do it in under 30 seconds to actually prove that transaction. And so if we scroll down, what I've noticed here, they've got the Smash Lab. So if we check out the Smash Lab overall, this is taking in the blockchain inputs from Ethereum, BitCoin, and Neo. And what it's doing is that it's producing the Block Collider hash at the other end. So if we go ahead and mine, let's just see how long it actually takes in order to do that. So not bad. They've done it in 44 seconds and they've actually taken the hash blocks from each of the 3 blockchains, and this is what they've produced. So in all honesty, it's quite impressive. It is quite impressive nonetheless. So I quite like that. You know, this is good proof of their algorithm overall. So, you know, this is good. I like this. I like to see prototypes. I like to see proof of what they're working on as well, and this clearly shows it. So I like that. Right, now let's move on to the team. Overall, we've got Patrick. Patrick's the co-founder and core developer. So if we just have a quick look at Patrick's background, so we can certainly see his experience is within being a data scientist. So that's always quite key within this space. Being a data scientist certainly helps you analyze the data at a much lower granular level. If we sort of go back, he's been a data engineer previously to that, an engineer, worked at eBay, worked at Noodle. So, you know, he's worked at some good brands overall. So I quite like that. He's also a founder of a previous seed company by the looks of it, or gone through a seed round called Effector.com. So he certainly had the experience before in terms of opening and running a company, or trying to get a company to a stage where it has enough funding to be able to launch. So that's pretty impressive to see. And then prior to that, non-academic years, fine. So that's while back at university. And then graduating in 2012. So, you know, my only criticism here is Patrick seems like he could be a bit young, on the younger side for what they're looking to do. I'm not seeing any blockchain experience either overall, but you know, young doesn't necessarily mean that it's a failure. You know, young just means that they're going to be coming across a lot more stumbling blocks, whereas someone who's quite seasoned and experienced may have already come across already. In terms of looking at other members in the team, you've got Arjun, who's the co-founder of Block Collider. So if we kind of go down, and I'm assuming he's going to be more the lead developer and product manager behind here. So he's had significant experience as a lead developer, product manager at previous organizations. I personally haven't heard of these organizations, but once again, what I do like to see here is that he was also a co-founder of another social media app. So once again, both the co-founders have experience in running organizations. So, you know, I would like to think that they've come across the hurdles that you would come across when it comes to running a company. So overall, you know, not too bad in terms of what I'm seeing. I'm not seeing anything that really stands out, but either way, you know, they've got that experience in terms of running organizations and companies. And more importantly, both the co-founders have a significant development background as well, which is obviously key at the end of the day, because it is a technical product that you're launching to market. In terms of sales and operations, they've got Craig Weissman. So background within sales, project manager, more Salesforce. I used to be a Salesforce consultant myself, so you know that's quite good to see. There is a certain level of technicality involved in understanding Salesforce, knowing Salesforce, configuring Salesforce, so I quite like that. And you know, he's on the sales front as well, so had that background, has used technical products as well, so I quite like that as well. Now we've got an advisor on the board as well, or an investor, and this individual has had backgrounds and has had dealings with Dfinity, which is quite a well-known hyped ICO at the moment, but also is an advisor to a number of other projects as well, Close Cross, Quibi, and Etheristic as well. So they do have an advisor on board who clearly is of a blockchain background as well. So that's quite handy to have, open up partnerships, help lead, and really, you know, drive some of that partnership, which is what really is needed in this space as well. So I quite like the look of that overall. Has been an investor, head of business development, managing partner, founder. So, you know, these are all good. It shows that they've had experience in partnering in a company, managing, founding companies as well. So they can certainly lend their experience as well as their advice within that space too. And then we've also got in here Ian Simpson, who's their marketing and comms. So what I do like about the team overall is that clearly they're looking to cover all the bases, from having development to sales to marketing, having an advisor on board as well. So this is also quite key, because ultimately you need to get your project out there. You need to have someone who's strong at marketing and communications to start really getting yourself noticed and bringing and building that awareness overall. And so as we look down, experiences, CoinDesk contributor, so that's really good. You know, in it, they know the news, they know what's going on, so I quite like the look of that. Director of Marketing and Communications, so that's really good to see. I quite like the look of that. Previously to that, Head of Marketing and Communications, so, you know, a good background in marketing, a good background in communication overall. So certainly impressed with what I'm seeing. Now, let's move on and have a look at the overall hype or awareness of the project. So if we kind of move around, we've got around 7,982 members. Now, one thing this project does claim is that they have not gone out for any paid marketing whatsoever. So this number of members has purely built up on word of mouth. There doesn't seem to be any bounty programs that I'm aware of either whatsoever. So to be honest, to get to 8,000 just through word of mouth, I think it is quite significant because it surely shows it's got a very strong community behind this as well, because a community is what is also going to push it forward. If we have a look at Twitter, 2,479 followers, and I suspect this will grow once this project gains a bit more traction, because at the end of the day, it is a very under the ICO radar because they're not paying for the marketing. They're not actively going out there marketing the product either. But what they are proposing is that they're going to launch a product at the ICO stage with mainnet. That in itself is going to be the proof in the pudding, because if they can show that it's working across chain like that, then that is really good. So now let's look at the token metrics. So looking at token metrics, we have overall the token is going to be called Emblem. The other tokens, which is going to be the minable currency, which is used to reward the miners, is called NRG. So none of that's being supplied at all. That is not pre-mined. You have to mine that. So if you're a miner, that is what's going to be your reward for that overall. The total supply is going to be 300 million emblems overall. It's fixed and not mineable. Okay. Now from there, a third of it is going to be for sale. Okay, so that's what's going to be available for the crowd sale. So around 33%. No NRG once again will be sold, or will it be pre-mined. Circulating supply from what we're going to see on CoinMarketCap is going to be 100 million. Okay. And then the overall conversion for 1 Ethereum, you'll get 12,400 emblems based on an Ethereum price of $868. So that would give us a rough price of 7 cents. So not bad. I actually do quite like the token metrics. Yes, it is slightly on the lower end of the scale in terms of total supply. But once again, what this could potentially mean is if the mainnet is working when they release their ICO, and they have that cross-chain interoperability, this is going to be huge. I mean, that is proof in itself. And because of the low cap, the multipliers on this can be quite significant. You could make a good amount of return, let's just say, on this if you were to go ahead from an investment perspective. So overall, the hard cap is 7 million. I really like this about the team. So, you know, if you have a look at their video, their opening video on their website, they believe that they should be able to do it within 7 million. They don't need 24, 30 million like the other projects ask. They believe that it can be done within 7 million. If it can be done, it would seriously make you question other blockchain services that are coming out as to why they are asking for so much funding overall if you can get an interoperable blockchain working for 7 million. In terms of what was sold in private and pre-sale, $4 million. So that really means that they're raising 3 million. Now, one of the really good things that you should really take away from this, yes, 3 million isn't much. It isn't under the radar ICO. So potentially, if there isn't enough hype around it, you could get in at a very early stage at a very good price. And when hype does come out, when people hear about this cross-chain blockchain service working, it can only do wonders for the overall token price. Now, the other thing to bear in mind is that a third is left for the team, and a third is obviously for foundation as well, so foundation members. Now, those coins are actually locked into a very lengthy vesting period, 2 years. So when these coins open up on the exchange, the dumping effect should be very, very minimal, because no one has bought these coins at a discount, at a pre-sale price. So it should just maintain its value, if not grow, because they already have a mainnet behind them. So you've got the proof. And the only point that they're going to be launching their ICO is when the mainnet is ready. So you're ultimately investing into a project that's already off the ground working and has cross-chain interoperability. The next step in that process will be obviously around the framework. So that's what we have in terms of token metrics. I certainly like what I'm seeing. I think they've planned it quite well. Yes, the token supply is quite less in terms of what's being sold, but then if you have a look at the actual mineable tokens, which is the NRG, that's 9.8 billion, so that's quite significantly higher. It'd be interesting to see how that plays out in terms of cost and how that all then factors into exchange prices as well. In terms of looking at the overall team, so the way I see it as the project, as you know, I don't personally like to grade a project or give it a percentage. You can deduce one if you wanted to. The top score here that any project can get overall is 30. So if you wanted to get to a percentage, you could do that. So, but what I like to do is just kind of show where the team needs to really evolve in order to become that, you know, all-star team and killer product. So in terms of project, I've given it a 4. I really like where they're going with it. I like the fact that they've got this blockchain interoperability space. Now there are other contenders within this space as well. You've got Polkadot, Cosmos, and Arc, but these guys do have a slight advantage over them in terms of that they don't need validators. As part of that, their consensus algorithm is proof of distance, which is significantly different from the others. It also does rely on, or doesn't rely on, but you know, the previous proof of work is already done by the previous blockchain, so they're kind of harnessing a lot of that overall. And you know, once again, they don't need to worry too much about scalability and all of those issues, because what they are doing, from what I understand, is they're just taking the header elements from those blockchains as part of the transactions that are created on Block Collider. Prototype, I've given it a 3. I certainly like the fact that they've got the Alexa app out there and looking to kind of get that all working. They've got the proof of distance algorithm in play and kind of showing you how quickly that can create the transaction. So very impressed with that overall. The team, I've given them a 3. No one's really standing out with significant blockchain experience. I do like the fact that they have founders who have also founded other companies, founders that also have a development background. I do also like that they're trying to cover all bases in terms of marketing, sales, as well as having an investor in board who's obviously within the blockchain space as well and is also invested in the program, has been part of the Definity launch as well overall. But once again, you know, I've given the advisors 2 here because there's only the 1, but who knows, as this project grows traction, they have, remember, bear in mind that they haven't really paid for any marketing. They're clearly looking to use as little money or raise as little money as possible to actually show that you can deliver a blockchain within $7 million. And I suspect that will just only grow from there. The token metrics, I've given it a 4. I quite like what I see. Yes, the token cap is quite low, but that's fine. That's okay. The price is okay in terms of 7 cent. Hard cap being 7 million. You know, I quite like what they're doing with this overall. The hype, I've given it a 2. And really, I'm not too concerned about the hype. Clearly their point here is that they want to be able to just go on, crack on and actually deliver a project, cross-chain project, and that hype will naturally come to them over time. As you can see, they've already made it up to nearly 8,000 members in Telegram, and that's just through word of mouth. There's no bounty, there's no paid media, there's no paid content whatsoever out there in order to do that. So they're kind of getting hype through word of mouth, and that's that. So anyway, guys, I hope you've enjoyed the review. Please give it a thumbs up if you liked it, and you know, really share the video and share it with your friends, and so I can ultimately grow my subscription base and create more content for you guys. And if you dislike the video, do let me know why. I'm always about improving, so you know, if you leave a couple of comments in the description below, please do that. If you want to find out more about the white paper, about the website, everything's in the description below as well. So see you soon, guys. Stay tuned. Thanks for joining. Bye.